Hello. 9 months of the financial year have almost gone. But do you know how much profit you've currently made to date? Or more importantly, do you know how much tax you would currently have to pay on that profit? Well, our 2017 tax planning season will be launched at the end of this month. So if you want to know the answers to those questions or get a second opinion on how you are travelling, then have a look at how we do this. When you meet with us, we work out with you what your goals are and realistically what you want your business to do for you. Then we work with you to see how we might be able to achieve that whilst looking to reduce your tax. So what's the secret? Would you like to learn the secrets to tax planning? Let's have a brief look at how we could reduce your tax. On the left-hand side of this page, we assume that you could have business income, employment income, or investment income. So let's assume that you run a business in a company and you've made $100,000 worth of profit, and without any tax planning, you're going to pay 30% of that in tax. That's $30,000 gone to the tax man. Our goal is to reduce your tax, but one of the best things we do is find ways to not only reduce your tax, but at the same time increase your wealth. Now, one of the ways of reducing your tax is to reduce your income. But of course, none of us want to do that. We want to focus on making more. So let's look at reducing your tax by increasing your tax deductions. One of the most effective ways of reducing your tax is by making contributions into your superannuation fund. So if we assume you can make a $30,000 contribution into your superannuation fund, you will save 15% of that in tax. From some of your profit, you put $30,000 into your superannuation fund. Let's say you also have a family trust, which is an investment loan. You could make a prepayment of interest on that loan of, say, $10,000. You could potentially save another 30% or $3,000 in tax. If there were other prepayments you could make of tax deductions before the 30th of June, you could save 30% on the tax for those as well. Why do we want to look at reducing your tax? Well, if we can get your tax down, we can then increase your wealth. The tax saved could mean a deposit for your family home, for an investment property, or you can use it to pay off your non-deductible home loan faster and build up assets in your family trust and superannuation fund. Remember, however, you will only save or get back the tax at your marginal tax rate on the expense that you pay. For example, if you spend $100 on a tax deduction and your marginal rate of tax is 49%, you will only save or get back $49. This information illustrates how our tax planning service works and is general advice only, as we would need to tailor tax planning advice that is unique to your own personal circumstances. So contact our customer services manager today on 55 612 643 to arrange a tax planning meeting.